Today's the day for important releases relating to inflation in the UK and retail sales in the US. With me on the line to discuss this data in a bit more detail is Mike Baghdady from Training Traders, who's recently been in the spotlight for creating an Alan Sugar-style apprentice, hoping to find the next star of the stock exchange. Mike, thanks for joining us. We've had UK CPI data out today. Let's just start with that. You took a look at it. Where do you stand on the specifics of the data?
Well, the CPI today stands at 2.6% up from the June number, which is 2.4%. And as you may know, that the largest increase came basically from transport, clothing, and footwear. If you would take the seasonal aspect into that, you might consider the Olympics, if you will, that particularly the transport, which is the airlines and stuff like that, people coming into the United Kingdom traveling to attend the Olympics, that was what generated the spike, if you will, from the 2.4 to 2.6. If you look at the core components of the CPI, by basically looking at the commodities, the food, most of these are relaxed. They're not at the recent highs. And so it would be prudent to take that number with a grain of salt, just with view of what is the events that have been taking place in the United Kingdom, which is primarily the Olympics.
So you've established the Olympics is mostly responsible for these CPI figures. Does this mean we'll start to see a decline in inflation now?
The major components of the CPI was airfares. I mean, in this calculations that they took in July was particularly the airfares and clothing and footwear, which is what people were buying to as memorabilia or stuff for the Olympics. So it should decline start to ease off, and that's good for the economy. When the CPI comes down, that would encourage consumption to go up.
Just moving on to today's retail sales in the US then. Some analysts were expecting retail purchases to move up higher for the first time in 4 months for July. Would you agree with this? Well,
there are two elements into this component. That you have to take the season, you have to consider the seasonality of this month retail sale. This is July, it's the peak of the holiday season. So it is understandable that it might snap back a little bit. Coming in the September, you're coming into the return to school season, and there where you're going to begin to see the real retail purchases, and that is the number that should be taken to evaluate the health of the American consumer, because going back to school is the major event, and everybody now is holding his or her cash, if you will, in anticipation of the back-to-school purchases. The situation of the U.S. economy, that per se is, we are in a stagnation. We're coming close to the fiscal cliff, as they say, and that's the new term that's being used. The super committee has not reached an agreement. There should be a $1.2 trillion cuts, and that is the dilemma that the U.S. economy is facing from here until the January or until the election. And Bernanke will not be able to do anything prior to November, so because the Fed wants to stay neutral, not to get involved with the election.
So finally, looking at both the UK and US data out today, what's your analysis of how the markets reacted?
Just by looking at today's market action, Thomas, you would see that, for example, the pound didn't have any reaction whatsoever to the numbers that came up. Neither did the dollar, and there is no real reaction to the news. Neither no positive reaction nor negative reaction, and that's the final arbiter. Is the price action is the final arbiter that the market is now dictating to us that, hey guys, I'm not going anywhere, and that's the fait accompli.
OK, thanks for joining us, Mike, to discuss the UK CPI and US advanced retail sales in a bit more detail. That's all for now here on Dukascopy TV. Keep checking back to get the latest updates and interviews from our team here at Dukascopy TV. But until next time, goodbye.